Welcome back to the Eric Krown crypto channel. Wishing you a happy and healthy start on this nice, very slow Sunday morning over here from Helsinki, Finland. I wanted to take this slow Sunday to go over the macro picture in sort of the best case and worst case scenario that I'm looking at in the next month to 2 months, let's say. With that in mind, we're going to come out with some obvious validation conditions for this. And with all of that said, we might swing back and do some short-term time frame analysis as well. I mean, it's the same thing as yesterday, basically. We got a little bit of the bounce that we were looking for. I don't really have too much to add on to it other than that. Anyways, I should also humbly request, and also maybe even say it properly as well, that if you do find this content valuable or compelling or whatever, or if you just want to support it, please do consider hitting the like button right there, as the old herp and dirt button actually does quite help. It's an easy and free way to give back to the channel if you so desire, if you so want. You can always unlike it and dislike it at the end of the day as well, you know? You might just decide that you don't like this curly-headed fuck. Anyways, we're going to swing back into the Krown chain application a little bit later. As always, going to play a major part within this analysis, but I want to dive right into it right off the bat right here. We're going back to this chart, this very important 5-day chart right here, of which it really is going to drive this sort of narrative for the next month and a half to come. We still have not seen resolution on this, even though we have been tracking it and looking at it as quite compelling since basically early March. You can see that this really does test patience as well. We're looking at a 5-day time frame, so each and every 5 days you get one damn tick, and then you got to wait another 5 days. So I don't believe that we've seen the resolution from this just yet, but basically to go over this chart and what this whole analysis is based off for the macro, best case and worst case scenario. Anytime that we have seen 5-day BBWP measuring volatility, the dispersion of returns, obviously, getting into the teens, let's say, or even lower, just basically extreme lows right here, as you can see on this chart for the past few years. The resolution from those extreme lows has had a pretty amazing effect, actually, of which we've seen on average about a 45% move to the upside or the downside from that expansive phase. Now, when we go and zero in it right here, well, we have had some early indication as of like the last couple weeks that we are going to start to see this relatively soon. We still have not seen that real expansive move off the lows right here. And what we're looking for is similar to what we saw, on these 4 iterations right here, where you see that next leg and immediately the BBWP explodes, like 20 percentile in one bar. So we haven't seen that just yet. It's certainly baking. The probability of this exploding, gets higher and higher with each and every passing closure. And we're actually going to close another one today at 7, or no, not 7, but 8 p.m. Eastern time. Anyways, the presumed targets off of the expansion from this, either to the upside or the downside, from this current region would be about $25,000 or $24,000 to the downside versus about $56,000 to the upside. Now, that upside target can actually easily be expanded further from that towards about 65,000, which would probably be more in line with the macro. And this typically happens over the course of about a little bit over 40 days. So about a month and a half from that initial expansion date, which we haven't seen yet. We really want to see that first major slope up. Until then, it's baking. We kind of understand what's at stake right here. And there is one big signal, one major signal that has just been very consistent in getting things right. This is actually not relevant right here because obviously we didn't see the expansion from there. But in the past couple of years here, anytime that we've seen the 5-day stochastic momentum direction alongside that volatility expansion, it's gone that direction. Well, it's gone that direction perfectly, actually. It doesn't mean it's always going to work like that, but it works until it don't, right? Anyways, in this case, you can see right here from the chart, first iteration down, next 2 up, next one down in December, and same thing over here, down, up, and down again. Anyways, as of right now, we can see that it is still upside angled with today's closure to go. We are, however, not seeing that major expansion level here on the BBWP that would make me that would indicate that quite literally is going to be the direction. And what's very important about this right now is that this momentum on the 5-day stochastic momentum oscillator is going to be pivoted, as we can look at from KBDB's indicator, below $42,000. That is to say that if Bitcoin does close this next 5-day, closing tonight actually, below $42,000, this will flip down. And it'll also be considered a rejection, basically, of the bullish control zone. So very greatly increasing the odds of downside resolution here, alongside a few other things as well, actually, that we're going to go over. But for right now, it does remain with upside. So I do want to go over what the likely bullish scenario would look like right here. Now, keep in mind, and I want to be very much deliberately clear in stating and on the record that as of right now, there actually are more things pointed towards the downside than the upside. But there is a very, very important potential bear trap condition here, or bear trap setup right here, that is far away from being validated, but is present. Okay, so first and foremost, let's start it off over here. We're going to give it the bullish look first. So what essentially would validate the bullish case? Well, we want to see that closure on the 5-day alongside expansion and alongside 5-day stochastic momentum still being up. On top of that, very specifically in the short term, as I throw on my drawing tools right here, what do we want to see? And this is not relevant towards what we're talking about. That's the short-term timeframes. What we want to see to confirm this as a bear trap, with targets up first at about 48,000 bucks, then 51 to 52, and then yeah, that $56,000 target does become relevant, would be with a daily closure above 45,000 bucks, actually just above 45,000 bucks right here, 45,100 if you want to be super exact. As I drop my little thinking tool, damn it. Oh well, whatever. It's gone, man. It's fucking gone. Gone like the wind. Anyways, in this case, yeah. So that would validate this as a local low, also a higher low on the daily as well. Also would confirm, whoops, my bad, hidden bullish divergence right here, which is possible, but not present, obviously. We'd have to confirm a local low, and that would have targets back up, again, towards the top side of our current rally at 48 or just above 48. Very likely short-term pullback right there, then bust on through, do some bust in action all the way to 51, 52, and then onwards and, and forwards. That would be sort of the hopium for right now. And yes, it is still possible. I do kind of lean a little bit more towards the downside myself, but this is, I just want to give out the information there in the most neutral way possible. Make the decision for yourself at the end of the day. Anyways, so yes, that is potentially in play right there. I'm just referencing my targets, or sorry, my notes over here to make sure that everything is all well and good. And yes, and then also as far as that $45,000 region goes, that is based off of the 618 right here. So getting back above there, no longer is this a high probability, downtrend, but very likely a reversal. And then also if we were to go to the old Gaussian over here as well, you'll notice that on the daily for CME, the top side of the Gaussian channel is actually right around 45,000 bucks as well. And you got the median band right here at about 42, which probably does get, we're pretty much testing already. So basically it'd be like, hey, you're just seeing a correction down to the median band after getting rejected from the top side. That's normal. And then you're going to pop back above and continue trend to the upside. Fair enough. And this, of course, would be a higher low, very obviously right here. So that is possible, yes. And also you'd just be looking at it, or you could just be looking at it as, a technical correction, right? Technical correction down to the 382 on a bullish retracement for the fibs right here. And if that is to be true, then that would indicate, a strong trending movement, obviously. But again, these are farther away for right now. It's possible. I do think, however, that based off this past week, the downside probabilities have increased significantly, actually. So let's go over that now, as we are 8 minutes into this video. I'm trying not to make this too damn long, but there are several things to be aware of for the downside. First and foremost, the most obvious one is, again, coming back to the advanced stochastic over here, $42,000 pivoted on the 5-day momentum. If Bitcoin closed below there today for the 5-day closure and also the weekly closure, you're going to see 5-day momentum turn down, which again, the stochastic has actually been really, really good alongside that BBWP expansion for getting the direction confirm. Plus, you'd see weekly hidden bearish divergence confirm right here, which spot has not confirmed just yet. Obviously, it closed tonight. Any sort of a closure below last week's low will do it, below about 44,000 bucks. To be fair, CME is already closed for the week, and it already did do that. Closed below last week's low. Got a local high right there. Hidden bearish divergence right here. Volatility very, very low, looking for expansion. A little bit of a nasty setup, of course, as well. And then to speak a little bit further to that, we do see on our stochastic momentum oscillator over here for the daily, still nosediving. Now, to be fair, this is pretty extreme down here, so it could very easily flip back to the upside. Technically speaking, won't happen until Bitcoin closes above $46,000, which is actually even above my $45,000 confirmation of bear trap region. And then the 2-day, which closes tonight as well, is going to be crossing down as well. And I suspect that it probably does test somewhere around this regression here in the neutral zone. Anyways, so if the weekly does get confirmed on spot, which keep in mind it's already confirmed on CME, so highly likely that it does. And personally speaking, I trust CME signals a lot more than I do on spot anyways. There would be a technical target based off that hidden bearish divergence call, and that would be back down to around the bottom side of our prior weekly range, which would be about 38,500 or so in this region right here. Also in line, if I can zoom it in, also in line with the 618 Fibonacci retracement. which is, a likely area. Obviously, that can get worse over time, but, we should also combine that with a few other things that I do think sort of make this a little bit more of a mature analysis, of which the big one for me, two of the big ones for me, are global open interest and the leverage ratio. First and foremost, and the easiest one to understand, leverage ratio, the ratio between leverage positions and spot positions, pretty much at all-time highs again. And usually hasn't been a good thing, although we do expect that to naturally trend to the upside over time. It's a maturing asset after all, but at the same time, I mean, that is not been the best signal in the past, let's say. And also of great interest right here is going to be the global open interest, of which we got above 14 billion. We even got to 14.5 billion on that last move up when Bitcoin was trading around about 48,000 bucks. To put that in perspective, again, keeping in mind that global open interest represents leverage positions on the board, that was about $1 billion higher than what we saw a few months ago in December, when Bitcoin was trading at around $51,000 to $52,000 before actually continuing down, and very comparable to what we saw in April of last year, when Bitcoin was putting in its first all-time, or one of its all-time highs at $65,000, and then the more recent one, actually Bitcoin was well above there. But my point is that over the past few years here, anytime that we have seen open interest get above 14 billion, anytime we've seen open interest get above 14 billion plus a local high is confirmed, which we have done that as well, the drawback from that has been 20% minimum, 50% on some of them as well. Obviously, these two right here on extremes were 50%. This one more recently in December, about 20%. And then we had another one over here in September, another 20% one as well. And where would a 20% move put Bitcoin from high to low if we were to just shave it off right there? Puts Bitcoin right around about 38,500 as well. So that would be rather concerning. And then, of course, when we go back into the chart over here, or sorry, there's one last thing that I do think kind of rounds this out. Let's go back to the Gaussian. And if we put this on a 5-day, you'll notice that the 5-day, if we go to spot price action, we can even look at CME as well, but for spot price action, it's bad enough, right? It's rejected the top, or sorry, not the top side, but the median band. Typically, after you reject the median band in a posturing like this, you're going to come back down and test around the bottom side, which is currently around 39,000 bucks. Could get wicks down to that 38.5 target very easily. And also there, also freshly turning red here, but I don't think that matters. I know that there's some other people out there people have shown me these analyses that oh, it's turning red and that's bad. I think that if you backtest that very clearly, that is not it doesn't matter. I can just show you the signal right here. Turns red. That was literally the low. Would have been a fucking career-ending move to short that, literally at 7,000 bucks before Bitcoin goes to 65. One of them over here did work out pretty well. We can definitely say that in July of 2018, loses it and all the way down throughout the rest of the market cycle. The next one over here also did work pretty damn well, I should say here too. Bitcoin was already trading below the bottom side of the Gaussian, however. And then over here in December 2011, not good at all. Turns red, literally the low. So 2 out of 4 iterations actually worked pretty damn well. The other 2, terrible, potentially career-ending moves. So 50% hit rate, not good in my books, but hey, to each their own, obviously. Anyways, so yes, that would be concerning as well, suggesting, that downside move plays out before anything else. Could it be that Bitcoin, comes back down there, sets another higher low, and then flips around? Possible, yes, definitely possible. But we should talk about what is potentially at stake for the macro if Bitcoin were to start to break these range lows here. And when I say break these range lows, I mean, close in higher time frames below about 37,000 bucks. Well, remember, the reason why I really want to consider this is simply because on this chart over here, we would have a projected target on downside resolution of this whole signal right here, somewhere around 25,000 bucks actually. And yes, it has moved up over time because, we'd now be taking it over here from the expansion if it does expand. And, what else would sort of align with that if we were to explore the possibilities of this? Well, let's go over here to the secondary chart. This is a chart that I haven't looked at in a while because it, hasn't been super relevant for a while. It's even on Luna for right now for whatever it's worth. But we can go over here to the monthly The monthly MACD combined with the monthly 20 simple. We'll start with the MACD. Anytime that we've seen the MACD on the monthly cross to the downside, which to be fair, there's only been 3 iterations in the past. And when I'm trading, like when I'm actually doing my trading strategies, I want like hundreds of iterations. So understand that, there is some good pushback for ideas like this. I do want to represent both sides as neutrally as possible. But in this case, yes, every time that we have seen monthly MACD cross to the downside, as represented by these green vertical bars, well, what's happened on price action? Boom, down, boom, down, boom, big down. And all of these moves did correct down to the green 55 exponential moving average, over the course of the next half year to a year or so. Take some time. And that move got massively expedited once Bitcoin actually closed below, as you can see right here, the circle, that white 20 simple moving average. So once that happened, that's when, the move really started to really started to get catalyzed. So you see it right here, close below, boom, just by a smidge and then down. And then same thing over here. Actually, this one was pretty much all done in one fell swoop for the Rona dump, of course. But right now, Bitcoin obviously already has the monthly MACD cross to the downside. But what's missing would be the monthly closure below the 20 simple. Now, the monthly just closed like 10 days ago, so this, like pretty early to be judging this, but currently speaking, the monthly 20 simple is at just about $40,000. And the corrective target based off that as well would be the 55 here, and that's around like 24.5 to 25,000 bucks as well. So I do think, and will naturally go up over time as well with each and every passing month. So I do think that would be relevant if we start to close monthlies below 40,000 or even like a daily below about $37,000. I do think that would be front runnable, like last month's low. That would probably be good enough for me, personally speaking. Of course, everyone's free to do what they want to do. But yeah, that would be, I suppose, very concerning for the long term, not to drum up any unnecessary fears, but we do want to be aware of what's possible, because we spoke about the hopium to the upside. I mean, we could just as easily talk about a target towards $56,000 to $65,000. Just the problem right now is that more things are signaling downside as that goes onwards and forwards. Anyway, so just want to reference my notes once again. I think we're good on that. Should we go over the lower term timeframes, because we actually do seem to have a little bit of extra time. Hopefully I can make this below about 20 minutes. I mean, it's the same shit as yesterday, basically. It's the same shit as yesterday. Really wouldn't take too much to get Bitcoin on a bounce here. Lower term timeframe stochastic momentum is like corrected very, very heavily here. Obviously the daily, this one's very unlikely to turn up today, but naturally when we come into tomorrow after today's close, this number should come down significantly, and we can all see that it's like very aggressively down right here. 12 hours already pivoted around 43,000 bucks. Bitcoin technically 500 bucks below there still, so pressure is to the downside, but with volatility looking like it's about to cool off after a bit of a short-term move, probably corrective move in play here, which would imply a little bit of short-term upside. 6 hour will turn up above about 42.3, or remain upside I should say. 4 hour will also remain with upside above 42.3. Again, kind of weak there, but better than nothing. 3 hour also up above about 42.5, and hourly is actually down below 42.8. So we see a lot of bifurcation here. I wouldn't feel super confident like making any concerted call, but on any sort of a corrective move up to about 43.8 to 44,000 bucks, that would be a good pullback area. I do think that Bitcoin's more likely to do a bounce off of this region right here, which we're, pretty much in already. There might be one more swipe to the downside and then a bit of a bounce. And then the real question is, do you get another rejection right here and turn back down? If you do, that's going to be pretty ugly. If you don't, and you flip back around and actually close above 43.8, I would increase targets somewhere between about 44.5 to 45,000 bucks. Obviously, that's where things can really start to change, because if Bitcoin does start to close above this one specifically, that's my confirmed bear trap with big targets to the upside. Obviously, short, medium, and long term. Until then, though, just looking at lower highs and technically speaking, more likely to see continuation, down towards that just below $40,000 target. And then I guess the hopium from there would be, still just another weekly higher low. So we just flip back around and all good in the hood. And, and we can start to talk about, major targets towards 60,000 bucks again, in the probably far away future. But yeah, that's going to be it for today. I hope that this was in some way helpful. I should also say that if Bitcoin does close a 4-hour below about 41.5, I suppose I'd look for continuation to the downside first before any sort of meaningful bounce, that being at around 40,000 bucks. Nice round psychological even number, probably another, shitty bounce there and then shitty walk all the way down. But for right now, that's kind of what's at stake. That is what I'm kind of looking at as the macro best case scenario and macro kind of worst case scenario from here. I do think that we're going to see resolution on this, relatively soon. Volatility in the way that it's designed, or the BBWP indicator in the way that it's designed, once it gets low, it is designed to expand from there. So it is a bit of a ticking time bomb. And with that said, I want to be wishing you the best as always. Take care and see you hopefully soon.